Hey, so we're going to be checking out ASML. The last time we checked on them was about a month ago. It was March 17th. At that point, it was trading at 633. It's currently at 627, so not much change. We have the 1 month chart on the screen in the center. It looks like it's had a couple bumps, but ultimately traded a little less, not by much. We did have a buy point marked on this one at 624 and a resistance line of 667. So they just recently released their quarter 1 financial statement. So we'll start off by picking out some fun facts, then digging into the actual quarterly report, and then wrap up with some China news and how ASML is being impacted by some China restrictions, and then ultimately finish up with the technical analysis for ASML. So, and also before I get started, if you uh, feel that I left something out in terms of the news, by all means let me know in the comments. Or if you have a question on anything, again, feel free to leave that in the comments and I'd be happy to read that. But starting off with some of their uh, results. So ASML did beat their results in this quarter. So some of the main point that I wanted to drive here was ASML posted a threefold jump in net profit to 1.96 billion euros, which is equivalent to 2.15 billion in US dollars, on revenue up 91% to 6.74 billion euros. Analysts had forecast net profit of 1.62 billion euros on revenue and 6.31 billion. So clearly they expected 6.31, they got 6.74. They also thought net income would be 1.62. They almost hit 2 billion. So they did very well this quarter. And the result of that is because they continue to have struggles to meet the demand of their top customers, which is TSM in Taiwan. They have Samsung in South Korea, and then Intel is now a new player. And with all these companies buying their machinery, especially since there's a new chip, I think it's the 3 nanometer. They all want the latest and greatest, and then of course they already had backlog for other types of machines, so this is just piling on. So digging into the first quarter results a little bit more. First quarter net sales $6.7 billion, gross margin 50%, which is great. We love to see that, especially in tech clients, to have that 50% gross margin. Net income $2 billion. Net bookings was 3.8 billion, and they also mentioned 1.6 of that was for the EUVs. I think they sell like 3 types. There's the EUV, the DUV, and then some other type that's not like a majority position. It's mainly the EUV and the DUV. This next one, ASML expects their next quarter sales to be about 6.5 to 7, which is very similar to this quarter. And they do expect to keep those gross margins at about 50%. ASML expects 2023 net sales to grow 25% compared to 2022. So lots of growth. Just fair warning, I feel like this is going to be deceiving, uh, but we'll get to that in time. Uh, I do have an opinion on this. So here they kind of show the side by side, quarter 4 being the last quarter, and then quarter 1 on the right, the most recent, with the net sales, which we just went over, the gross profit margin, the net income. It seems great. So if we continue along, we have, I believe the CEO says somewhere in here, something about the demand. Where did I put that? The overall demand. He goes on to say the overall demand is exceeding, here it is. The overall demand still exceeds our capacity for this year, and we currently have a backlog of over 38.9 billion. We're just going to say 39 million, or billion, I'm sorry. Our focus continues to be on maximizing our system output. So this seems great. I mean, nearly $40 billion in backlog. And if we scroll back up, we can see 1 quarter for them, which this is, I don't know if it's their all-time high. I think they've hit higher last year or like in 2021, maybe in like 7 billion. But still, if we just take 7 billion, we'll just round up to 7 billion. 7 billion times 4 quarters, that's $28 billion. They have over a year worth of revenue in backlog. So that seems great, you know? So we're going to keep with the sunny side here. If we continue along, um, it just gives us a little more background, which we'll get into this with the quarterly presentation, where their R&D costs are around almost $1 billion. Their selling, general, and administrative costs are about 275 million. For 2023, ASML continued strong growth, with net sales increasing of over 25% and a slight improvement to gross margin relative to 2022. Again, it's all around 50. I think once we get to the annual report, I think we can see the side by side where last year was maybe like 55% and now it has dropped down to like 51. But based on what that comment said, it sounds like that was maybe just a point in time as opposed to um, the 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 full year, where this is saying the full year it's gone up a little bit. Something else that we will mention is they purchased $400 million worth of their shares in a buyback program that they set up for 2022 to 2025. I forget how large the buyback program is, but the fact that they're buying their shares, I mean, that does show something. That shows that they are committed. They feel like the company's at a good price, and probably they want to boost the price a little bit to, you know, the everyday investors such as ourselves. Um, and they also intend to declare a total dividend for the year of $5.80 in euros. So for American, it might be like six something, um, which is 5%, 5.5% increase over 2021. So it's gone up a little bit. And again, that would be about, they're saying uh, the conversion to American, I think it's about $1.50 or something. That's a rough estimate. Um, Next is just this just kind of is proof of their buyback. So this is the dates from April 10th to the 14th. So just in 1 week, they bought nearly 32, maybe like $34 billion or 34 billion euros worth of their stock in just a week. And as we mentioned earlier, it was $400 million in that quarter. So that's yeah, that's helping the price, I think, if anything. But finally, here's the quarterly report. So we've already kind of hit on a lot of the high notes here, but we'll just try to kind of build that out a little bit for us. So here's some of the points we mentioned about the net sales, the gross margin, the operating margin, the net income percentage, which this is nice. So every dollar that they make, 29 cents of that is coming as net income, which is like all there. So that's very good to see. Earnings per share, 496. That's decent. And net bookings, 3.8 billion. And I'm not sure where we're going to touch on that. I think it's going to be the next article, but something's very interesting about the net bookings. We might touch on it here too. But they did release a couple new products. This one, it looks like we shipped the first NXT 1980 Fi. I don't know if this is new. In support of the mature market segment, ASML is expanding its eye line, so this is just an expansion. Um, it must be fairly new. That's why they're making a note of it, but I don't think it's like brand new. I think it's like an adjacent line, like an extension type, but still its own machine. I don't know what to compare it to. But then we also have a new YieldStar 500, so another next generation optical machine here. So we'll see how these all play out. If we go into their quarterly sales, just some things that I want to point out. It looks like they're not calling it DUV. I'm not sure what ARFI is, but I believe that is the DUV type of lithography that they're using. So you can see uh, really it's just those two segments, the EUV and the DUV. We can see the net sales went up to 5 here, where it was 4 last time. And you can also see the split in terms of the region. We will touch on China here soon. So it looks like last quarter China made up 9%. This quarter it's making up 8%. Another thing that, if you're unfamiliar, I know we passed like a chart that kind of showed this, but I didn't mention it, but I'm going to mention it now, that this company, uh, they don't make that many sales. I mean, this literally is all the sales here. Hopefully it's pretty clear. Uh, these numbers are kind of faint looking, but hopefully you can see them. I mean, this right here is all the sales that they made. It's like 100 units. But the thing is, as we see, the revenue was like $6.8 billion. So each one of these machines is like hundreds of millions of dollars. So for what that's worth, I think it's important to mention. 2023 shaping up to be a great year. I do expect 2023 to be a great year for them, especially considering the backlog that we saw, which is more than a year worth of just sales waiting to actually take place. And if we just assume a straight line 2023 year here, if we just take, even if we just took $6 billion worth of sales, times that by 4, you're at 24. Last year they did 21, and you can see there's a little extra. So just a rough estimate would be maybe like $26 billion worth of sales compared to last year. So great jump. Like they even mentioned a 25% increase, and that is very likely. I do believe that. Net sales or net systems, so they have memory and logic being the main two. Um, I, I I guess I'm not too familiar with this. Memory, I guess that's Micron, and logic is literally everyone else. Capital to shareholders, outlook. So they are expecting that 25% for the year compared to 2022. They're expecting their gross margins to be between 50 and 51. They mentioned the R&D and net sales. So just things that we touched on before. So does it go into it here? Let's see, consolidated operating. So the net sales, gross profit. So they do mention this, the R&D and SG&A. They're going to go up a little bit. Nothing crazy though. I think that pretty much wraps this up in terms of like the current ratio, current liabilities. 13. Oh wait, we're over here. 16 compared to 10. It's pretty break even actually. They have about a 1-to-1 current ratio, taking their current assets divided by current liabilities. It's about 1-to-1. Property seems to be it grew a little bit. Nothing, I guess nothing worth mentioning, but it did go up about $400 million here. So moving on to now we're going to get back into the bookings, and this article makes it very clear here, and it just makes me think ahead. So if we scroll down a little bit, ASML said first quarter bookings dropped 46% to 3.75 billion. So their bookings last year for the first quarter, and probably every quarter during last year, was like $6 to $7 billion. And now all of a sudden we have a quarter now where it's 3.75, almost cut in half. Let's just continue on here. While ASML results were better than expected, it showed considerable lumpiness in the orders taken, suggesting some of the customer CapEx cuts are impacting. So I know TSM isn't really cutting their capex. I think originally they said 40 billion. I think they scaled it back to like 36 billion. But I mean, they didn't really cut back that much. I don't know what Samsung did because they're not uh, an American company that's traded on the stock market, so I'm not sure what they're doing. Intel, I'm aware. I think Intel's expanding, so I'm not sure. I have to imagine they've already made their orders in last year, so there's no need to make any orders this year. Maybe Intel because they're going to continue opening places. So I'm not sure if those expansions from TSM and Intel, if those orders have already been placed, even though the factories haven't been built. If they haven't been placed, I feel pretty good about this. Like, I'm not too concerned. But if those orders have been placed and we're seeing this, there's going to be a big drop. Um, of course, we're going to watch to see what happens in quarter two in terms of bookings. Will the bookings continue to be chopped in half? Because if they are, we're going to have one great year this year, 2023, and then it's just going to drop. It's going to drop really hard, really fast in 2024. I think that might be why some people are starting to leave now based on what happened here. They saw the bookings are starting to get cut, and so they want to get out while they still can with this price as high as it is. Uh, I think we'll have our answer by quarter two. And if we still are on the fence, quarter three should really seal the deal for us. But continuing on with this one, uh, let's see. Uh, this one touches on the China issue if I can find the line. Um, let's see. Here we go. The restrictions for China would be the restrictions are expected to prevent the shipments of 3 immersion deep ultraviolet lithography machines. That's the DUV. So there's going to be restrictions on that. And then it also mentions, yeah, this is basically the same thing. Bookings down 46%, might be shy of the market expectations. Its sales in 2024 could temporarily lose steam. That's what we were kind of going over earlier. Uh, they have one full year, probably a year and a quarter, already booked up. They just added another 3 billion, so we'll see. We'll see. Um, moving on to the next one. So here we have. So now we're getting into the China stuff. So the CEO, he met with China's Commerce Minister Wang Wentao on Tuesday. He was told China wants to create an accommodating business environment for foreign companies, where ASML can maintain confidence and help to jointly safeguard the stability of global semiconductor industrial chains. And so ASML's in this pickle here, and hopefully it gets explained as we just tread through this article. Next is, where is it? The Netherlands is currently mulling over further restrictions on exports of chip technology to China, which would require ASML to apply for a license before shipping its DUV systems to China, further impacting ASML's business in its third largest market. So this is another thing that you got to think about and consider is if there's going to be restrictions on China, which again, we saw their market was about 10%, slightly less, but we're just going to round to 10%. From what I can tell, they're still able to make sales to China. It's just the newer stuff. Probably, I would have to assume that it's probably the most expensive products. They cannot sell it to China because they've basically got into an agreement with the U.S. to kind of block them for a period of time. I don't know how long that'll last. It seems like, well, let's just continue on with the story. Let's see how this plays out. Um, uh, Here we go. ASML is arguably the most crucial company to the U.S.-led effort to curtail China's advanced chip-making ambitions. And again, because ASML is the only one who makes these lithography tools. I think there's another company, but ASML owns like 90% of the market. So if it's not if they didn't agree to this, the U.S.'s whole curtailing China thing, that wouldn't even be a thing. But ASML seems to be on board with this, uh, and I'll point it out at some point. Someone actually confirms this. But both Netherlands and China, or both Japan and Netherlands, have agreed to the U.S. request to implement restrictions. So there you go. There was the confirmation. I thought it was in another article, but it's right here. Um, so that was huge for whatever America's plans are. Because they got Netherlands, they are in. That was the one to get. The thing is, ASML expanded rapidly in China in the past few years, in spite of growing friction between Beijing and Washington. With its China unit hiring more than 1,500 people on the mainland last June to support faster growth. So it sounds like they already had stuff set up, which is nice. They already have easy access, which is good. The company added 200 new staff to its existing workforce of 1,400 last year, where it has 14 offices, 11 warehousing and logistics centers, 2 research and development bases, and a training center. So they actually have a pretty good arrangement in China already. So the fact that they're willing to do this thing with America is a little bit surprising. But again, I think the reason why they're willing to accept this is the fact that it's only the newer stuff. It's not everything. It's not a complete stop. It's just the newer stuff. And so I think I have to imagine they don't think it'll last too long. But here's a little bit more to that. Apparently, this has actually been going on for a little bit of time. ASML has been barred from selling its most advanced EUV stuff uh, to China since 2019, and basically, um, the sales of the DUV machines accounted for 34% of ASML's total system revenue in 2022 compared to 36%. So it's went down a little bit. EUV sales, meanwhile, accounted for 46% in both 2021 and 22. Um, I thought I was going to touch on something else there. Um, we'll get to it in a second, but let's go on to the next one. So still sticking with China here. So based on kind of the decisions that they made here, China sales dip in Q1, but seen stronger in the next 9 months. We're going to touch on why they think that. But to start off, expects sales in mainland China to pick up for the remainder of 2023, following a dip in the first quarter. It mentions China's the third biggest market after Taiwan and South Korea. I think the United States is going to be uh, running up pretty quick to third, depending on how much Intel buys. But continuing on, the restrictions for the chip manufacturing equipment. On March 8th, the Dutch government confirmed it would align with the US and introduce new rules by this summer restricting exports of some equipment made by ASML as potentially having a dual use military application. So that's kind of the reason. That's what they're saying the reason is that some of these chip tools like these EUV, these DUV type of lithography machines, apparently they can be somehow used with. I have to imagine it's like they can make these certain chips to help, I don't know, like their fighter jets or something like that. And America wants to kind of, you know, not allow that to happen. And it looks like Netherlands agreed and ASML's agreed. So that's, to a degree, that is good. Uh, Dawson, I'm not sure who this is, but Dawson reiterated that that would affect one slice of potential exports to mainland China, but demand from chip makers who make slightly older chips remains strong. So that's China's thing here. Domestic China accounts for more than 20% in the backlog, and I have to just assume at this point that they know that they can't sell these advanced things, so that 20%, I'm going to assume that is like true stuff and not going to get altered when we get to when this agreement actually kind of takes place. Like, hopefully that makes sense. That that 20% backlog is like legitimate sales. That's not going to change. You know, in terms of maybe 2% of it was the newer stuff that now they can't sell it. I don't think that's the case here, but just something to think about. Um, Despite a dip in the first quarter, sales to about 8% of the company's total. So uh, basically, what they're saying is even though China made up 8% of the sales for the quarter, of the backlog, they have 20%. So China is looking to expand, much like everybody. So that checks out. Our last article before we get to the technicals is just a one liner here, and this kind of wraps up what I think China's strategy is here based on kind of what's evolving in their scenario. The types of chips that we're talking about when it comes to the Chinese customers for ASML and LAM, that's the second company apparently, when it comes to that strong demand that they are seeing that will continue out of China. So Lam and ASML say that these Chinese customers are buying tools for building the less advanced chips, that those chips that go into the EVs, those chips that go into the mobile phones, that also go into laptops. So that is their solution. That's what China is doing. Um, you kind of got to do what you got to do. And so if they can't get these powerful things, they got to at least get the things that they can get, the best that they can get, which still allows them to access these new venues or continued venues like EVs would be the new stuff, mobile phones that would be the continuing on stuff. Same with the laptops. So that gives us a nice summary, a nice kind of story of what's going on there. And now let's go into the technical. So again, the last time we looked at this, it was at 633 as a price. We're now at 627. We'll zoom in a little bit more. We marked out that we were in an uptrend here for about since November. We marked it out, and now we're starting to dip below that trend. Um, I think, in all honesty, this is probably going to pull back hard. I think, if anything, we're going to probably trade probably in this range. I wouldn't be surprised if we got back to below 600 sometime during this quarter. And then when quarter two results come out, this stock is going to hinge on what are the bookings for quarter two. If the bookings are another 50% decrease from last year, so somewhere between $3 and $4 billion of orders, this one's going to plummet. If it picks back up to like a $6 or $7 billion in bookings, this one will go back to the moon. We at this point, I marked a buy point at 624. That buy point was based on, let's see, again, it was based at March 17th, which was the end of the week here, so the top of that green bar. And if we were to pull back, say, in a week or two, that's 624, right in here. If to catch the bottom of this chart, that was 624. Based on the news that I'm seeing, I'm actually going to drop my buy point down to, I'm going to put in a zone at this point, because I think that's, whoops, not vertical. I think that's going to be, that gives us a little bit of a buffer here, and I'm going to make this blue. So my buy point for this one has changed to 576. Currently 627. Resistance still clearly it was 667, because even though it did stick above it slightly, you can see it pulled right back the very next week, and so 667 is acting as pretty strong resistance right now. And again, only because of what we saw in the bookings do I think I'm willing to wait for this one to pull back to at least 576. If it comes to that point, yeah, I'll buy maybe a share. I'll add, because again, this is like a $600 stock, So if I have the funds available and it pulls back to that type of level, okay, I'll add one share. If it drops, say, below something like 550, okay, maybe I'd add another one. But that's how I'm playing this. So let me just update my tracker here. I know this video has been going on kind of long, but it needed to be. I needed to share it. So Q. I just want to write a note in here saying the Q1 bookings down. What was it, like 46%? So we'll see how that plays out. But so for now, because it's still early, I'm going to keep these uptrends intact, probably for another week or two. Probably by the time we circle back to this one, in maybe, like I said, 2 weeks preferably, but maybe 3 weeks would be okay. If we see it just drop sideways, and what I think is going to happen is it's going to start trending downwards, then at that point I will remove these uptrends. I'm going to actually draw in a trend line here of just something I think could happen. So where we are now, right about here, I think they came out with the earnings just recently. So we'll go to like 720. I think somehow it's going to trend like this. I'm sure it's going to be in a zone, but that's kind of my projection. And I'll make this gold just so it kind of stands out a little bit. We know it's different. Of course, we'll see how this plays out, but that's what I'm kind of anticipating is going to happen here over the next quarter until we get the Q2 bookings to either confirm what we thought was going to happen or to prove us wrong. Okay, yeah, so here's all I did. Here's the quick overview for us. So we have ASML at the top. Currently it's at 627. My current buy point's at 576. It might even drop lower. Resistance is still at 667. We added in the date. And then Q1 bookings down 46%. That's the big note for us. Honestly, I'm tempted to put... What I'm going to say is I'm actually going to change this. I'm going to be bearish on this one, and I'm actually going to put a buy point of 544. We'll see. I'll put them both just to please both sides of me, I guess. Whoops. Undo that. Let's put that there and make this there. Okay, so that was the update. I put 2 buy points in there. 544 is the optimal buy point at this moment, but if it was at 576, that would be the time that I would consider it, depending on when this all happens. I think, again, just to keep it short, if it were to follow this line like I drew it, because right around here is most likely when we're going to find out what happens, the Q2 results. So if it follows this line to a T, like, meaning, so if it got to say 576, our initial buy point, and it's still like June or May, then I'm going to wait. But if it's at like say 576 and we're a week away from earnings, then yeah, I might buy at 576. So just so we're clear. And then alternatively, if all of a sudden it's like end of May, beginning of June, and it's already nearing 544, I might buy there, but I would be tempted to actually wait to see if it pulls back to our original buy point closer to like 450. But that's the mentality. We'll definitely circle back on this one at least one time before Q2 bookings, and we'll see how it plays out. But yeah, that wraps this up. I hope you enjoyed it. Again, if you have any questions or want to leave any comments for me, by all means, let me know in the comment section below. Other than that, please like, subscribe, and I'll see you on the next one. Bye.